innovation that led success so high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking space. It is the 21st of September and I'm Swapnil Joglikar. And here's what all we have lined up for you today. Our cover story is on whether the Paytm Card Soundbox will upend the point-of-sale device market. For Bankers View this week, we have with us Prashant Tripathi, MD and CEO of Max Life Insurance. In Banking for You, we'll tell you how the RBI has made life easier for retail loan borrowers. In our expert take, Tamal Bandapadhyay joins us to discuss emerging trends in microfinance. And at the end of the show, we'll share with you the results of last week's poll and the questions for this week. All this in today's edition of the Business Standard Banking Show. Earlier this month, Paytm launched a Paytm Card Soundbox, a new soundbox that will now accept card payments in addition to mobile payments. The device comes with many features, which we will also tell you about. But the question we are trying to answer today is, will the Paytm Soundbox upend the point of sale or POS market? Raghu Mohan has the answer.
पेटीएम पर 50 रुपए प्राप्त हुए.
Paytm recently announced the launch of its Card Soundbox. The offering enables merchants to accept both mobile and card payments across the main card payment networks Visa, MasterCard, American Express and RuPay via the tap and pay model. But first things first, what is a soundbox? A soundbox is a portable speaker that gives merchants instant audio confirmation on receiving digital payments in the preferred regional language. This ensures that a payment is not missed during peak times. Its target market is essentially the small-medium enterprise merchants who can confirm the transaction without looking into their phones or bank details. Payments are capped at 5,000 rupees. The device comes with a 4-watt speaker. The Payment Card Soundbox offers alerts in 11 languages that the merchant can change through the Paytm Business app. Moreover, with Paytm Card Soundbox, users with NFC-enabled smartphones can pay through their phones using the tap feature.
Which was recently launched. I think it has the potential to make a significant change. I would not call it an ornamental change. Because, see, if you really think about it, so far the adoption of soundboxes in India has largely been amongst the smaller merchants. And a lot of these merchants do not so far have card machines simply because the economics of having a point-of-sale card machine does not make a lot of sense for them. So I think with the new innovation we are seeing with the cards adoption being enabled on these soundboxes, essentially what this is going to do is this is really going to enable them to start accepting more of tap payments as well from cards, which in turn I think will give a further push to digital payments that we see in India right now.
According to a Bank of America securities report, Paytm has a first mover advantage in this space. It is estimated that India has 40 to 45 million merchants, of whom 2.5 million are large, 20 to 25 million are tax-compliant small and medium enterprises, and 15 to 17 million of these SMEs have a low turnover. Banks and legacy POS companies typically service large merchants, and they don't need sound boxes. According to the report, Paytm could have 15 million devices in the next 2 to 3 years.
The legacy POS market will have its own place because if you really think about it, again, for the smaller merchants, the soundbox makes a lot of sense. But again, the traditional, POS machines that you have with cards, if you think about a lot of different sort of outlets, like let's say restaurants or maybe let's say, fancy stores, etc., it's possible that very often the consumer may not be very comfortable with an announcement being made that, okay, your transaction of these many rupees has been completed. So I think for transactions where maybe the consumer would perhaps prefer a little more discretionary sort of a transaction, or also for higher value purchases, because from what I understand right now, there is a limit of about 5,000 rupees for the card sound boxes. So, anything more than that will mean you still have to go to a traditional POS card machine. But having said that, I think what this really does is it ups the game for the traditional POS machines to get more innovative. So how do you make that value proposition better for merchants? Do you lower the fee that one is paying right now, or do you enhance functionality? I mean, you'll have to do something because the competition is for sure increasing.
The average capex for a soundbox is 1,250 rupees, although newer ones cost more. A merchant pays 100 rupees per month as a subscription fee to use this device. Paytm has two competitors in the soundbox business. These are PhonePe and BharatPe. So far, banks have had limited impact in this market. The life of a soundbox is usually 3 to 4 years, but could last 1 to 2 years more if the battery is replaced and maintained well. The legacy POS market has around 8 million units. A POS device costs over 10,000 rupees for hardware and comes with monthly charges of about 300 rupees to onboard merchants. Private banks dominate the POS market with a 74% market share. State-run banks account for 18% of the market share. Payment banks have a 7% market share, while foreign banks have a 1% market share. By reducing the onboarding cost for merchants and with a lower monthly fee, the Paytm Card Soundbox has the potential to reshape the POS machine business.
The POS machine business may be in for some overhaul with the entrance of this brand new device. In our next segment, Prashant Tripathi, MD and CEO of Max Life Insurance, spoke to Manojit Saha on various issues. He said that the company will look into the possibility of a reverse merger with Max Financial after Axis Bank completes the process of increasing its stake to 19%. The third largest private sector bank will infuse over 1,000 crore in Max Life. Watch this interview to find out.
Hello and welcome to the Business Standard Banking Show. Max Life Insurance, the fourth largest private sector life insurance player in the country, recently forayed into health and wellness category by launching a new product offering that integrates health protection and savings. Prashant Tripathi, Managing Director and CEO of Max Life, is with us today to discuss a range of issues, including the recent decision of Axis Bank to increase the stake in the bank to about 19.02%. Mr. Tripathi, welcome to the show.
Thank you, Manojit.
So to start with, please tell our viewers, what is the reason for launching this secure earning and wellness advantage or SEVA plan, and what kind of premium collection you are eyeing in the current financial from this product?
Thank you, Manojit, and thank you for bringing up SEVA first as in the short form of secured earning and wellness advantage plan. But SEVA actually captures what we are trying to do. And over last few quarters, we have really focused on the designs which are innovative, which are new to the market. And this is one of our attempts actually to bring innovation to the market. So if you look at the market, life insurance companies have had a mandate to launch fixed benefit products. We're not allowed actually to do indemnity linked products. And hence the market is kind of broken. If you need health, then you go to health insurers. You need savings and protection, you go to life insurers. But when we started to look for market data and insights, we found two things. Firstly, many people actually feel that I have not fallen sick, but I have paid the insurance premium. So what happened to my insurance premium? It has gone for somebody else. So there is, this sense that I wish I could get something back.
Right.
And the second one is many people feel that why should I go to multiple players? I wish if there was only one thing that covered me for just about everything, which means all the living needs. And the needs are, what if I go to hospital, ICU, critical illness, I have some other needs related to health, savings, which could be guaranteed, protection for health, as well as some kind of wellness wrapper so that, I'm forced to becoming healthy. Now, these solutions are currently existing in bits and pieces. So what we try to do was to bring it all together and create a non-par savings cum health design, where you have all these benefits available to you. And, it is really a unique plan in that sense, because it is giving you the advantage of health, protection, and savings all in one product with a wrapper of wellness.
So coming now to that Axis Bank issue. Now Axis Bank has recently decided to increase the stake by 7% more to 19.02%. There were certain reports that the market regulator CBS sought certain clarification from Max Life. What are the nature of those clarifications?
So you might remember that this deal actually was for Axis Bank to go up to 20%, and in the first tranche they had done 13, and 7 more was to go. Subsequently, IRDAI had objections with respect to pricing methodology, and they actually recommended us to follow a DCF methodology of valuation, which we will follow going forward. I think when it happens, all the regulators talk to each other, and SEBI also asks us questions with respect to the valuation methodology which was used earlier. All the responses have been given. We're waiting to hear from SEBI, but I'm very optimistic because SEBI would investigate whether in the valuation methodology the broad set of Max Financial Services shareholders were taken care of or not. We went through the entire process. Actually, that proposal as well as valuation methodology was approved by 99.9% shareholders, because
right,
as you can see, before this deal, Max Financial Services share price was more in the range of 400, and it went up to upwards of 900 rupees. So it has been a value creation mechanism for all the set of shareholders. So I'm very optimistic.
What does this mean for Max Life Insurance? Axis Bank has bought this additional stake for 113 per share. So, first of all, what is the pricing strategy, and what does it mean for Max Life Insurance way forward?
Yeah, Monojit, it all means great for all the set of stakeholders, and I'll talk about one by one. The biggest stakeholder is Max Life Insurance. We are going to receive 1,612 crores of primary capital in our company. Our solvency ratio was 188. That will get an absolute 39% jump. So we will have enough capital. It's a growing company. We are growing really rapidly. A growing life insurance company or financial services company needs capital. So it will give us enough capital for at least 2 years of growth. So that's a plus for us. From the other stakeholders' perspective, shareholders at large of Max Financial Services, it gives clarity that Axis Bank is going to come and be a major shareholder of Max Life Insurance, which just gives a clarity as well as a support of a large financial services institution to this entity, which means growth for the organization because they are our largest distributor. It gives a sense of permanence. It gives a sense of solidity. It gives a sense of stability to the organization. So it's really good. And you would notice that ever since that deal was announced, there's an uptick in our share price. And from Axis Bank's perspective, we are, definitely their main stake in the life insurance venture. And I think with them coming on board, providing support, guidance, a stronger board participation will definitely give tailwind to this organization, and hence a growth in us actually means better valuation for them.
As you said, and rightly so, that life insurance companies need capital to grow, and you are a growing company. What about an IPO to raise funds, because some of your peers, the top 3 companies are listed. So any plan on listing?
So in a way, we are quasi-listed, Manojit. I don't know if you know, but our large shareholder, Max Financial Services, is a listed company.
Right.
We are the only subsidiary. So in a way, we are quasi-listed. Once the stake in Axis Bank is kind of done and they go up to 20%, we will definitely review all the possibilities to figure out a way of listing. It could be, firstly, it could be in form of figuring out a way so that Max Financial Services and Max Life Insurance could become one and be a listed company.
So you mean to say a reverse merger with Max Financial Services?
Yeah, we will review some of those structures, definitely. There is no point having two listed companies, one at Topco and the other one at what?
On that note, Mr. Tripathi, thank you very much for speaking to Business Standard. It was a pleasure talking to you, sir.
Thank you, Manojit, and you take care. Have a very nice day.
On September 13th, the Reserve Bank of India said that banks and non-banking finance companies would have to release original property documents to retail loan borrowers within 30 days of full repayment of the loan account. Bhashwar Kumar explains how this will make life easier for borrowers in our Banking for You segment.
Life is set to get easier for retail loan borrowers. That is because the Reserve Bank of India, or RBI, recently issued directions to regulated entities to release all original movable and immovable property documents and remove charges registered with any registry within a period of 30 days after the full payment or settlement of the loan account. So why has the RBI taken this step? While regulated entities were already required to release all such property documents upon receiving full repayment and the closure of the loan account, the recent RBI circular said that these entities had been following different practices in this regard, which was leading to customer grievances and disputes. That's the reason, and it also tells you why borrowers can breathe easier going ahead. And who does the new directive apply to? It is applicable to banks, non-banking financial companies, including housing finance companies, local area banks, cooperative banks, and asset reconstruction companies. Basically, all regulated entities. And it applies to loans for creating or enhancing immovable assets, loans for investment in financial assets, consumer credit, and education loans. This directive will apply to cases where the release of original property documents is scheduled on or after December 1st, 2023. But how will this directive be enforced? Well, according to the RBI, regulated entities will have to communicate the reasons for any such delay to the borrower, and where the delay is attributable to the entity and extends beyond 30 days, it will be required to compensate the borrower at a rate of 5,000 rupees per day for each day of delay. So is that all the borrowers can look forward to? No, there are other measures that will make their life easier too. First, the RBI has specified that borrowers should have the option to collect the original property documents from either the bank outlet or branch where the loan account was serviced, or from any other office of the regulated entity where the documents are available. Second, the timeline and location with regard to returning the documents will be outlined in the loan sanction letters. Third, the regulated entity must establish a well-defined procedure for the return of such documents to the legal heirs in case of the demise of the sole borrower or joint borrowers. Fourth, if the property documents are lost or damaged, either in full or in part, it is the lender who will be responsible for assisting the borrower in obtaining duplicate or certified copies of the concerned property documents. In addition to paying compensation, the lender will also bear the associated costs. However, the regulated entity will get an additional 30 days to complete this procedure, with the penalty for the delayed period being calculated thereafter.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
That is some good cheer for the retail borrowers. In our Expert Take segment today, our consulting editor Tamal Bandopadhyay sheds some light on the various factors contributing to the growth of the microfinance sector and the reason for the newfound enthusiasm behind it. Here's the chat.
Hi, Kamal. Welcome to the Business Standard Banking Show. First of all, I want to talk to you about what you've written in your column this week about the microfinance sector. What is it that is driving this enthusiasm for the microfinance sector at this moment?
Thanks, Ruchika. Yes, microfinance had a very, very tough time post-COVID. And now if you look at the numbers, I don't have the latest number. I use them till the March numbers. Latest numbers are even better. So the quality of assets is it's far, far better than before. And the growth also. In fact, if you see, quite a few banks are chasing microfinance at this point of time. Now, there are multiple reasons. Now, historically, what happened, if you go back a little bit, demonetization and GST, they formalize, the informal economy has come into more formalization, etc. And then the COVID lockdown, all these things, actually, the hygiene factor has changed in this space. And now, after that, what happened? Reserve Bank of India changed the norms. The new norms started from 2022 April. First is the level playing field created. Now, earlier, the rules were for microfinance entity, not for microfinance. Now, the same rule is applicable to banks and microfinance entities because the focus is on microfinance as a concept, as a business, not the microfinance entity. So, some of the banks were taking unfair advantage, enjoying that. That's gone. It's a level playing field. And second, very important part is this: Reserve Bank of India has freed the interest rate. Earlier, typically, if you are a relatively large microfinance entity, you had to cap your interest rate 10% above the cost of your money. Within that, you have to manage your operational cost and make profit. Now it's free. And if you see, I would like to believe all the microfinance entity have raised their interest rate, and nobody is complaining. And one more contributing factor, there are many more, but I would like to highlight one more, is this. Earlier, the microfinance entities were only accessing the credit bureau. That's a person's exposure to the microfinance. Now they're getting the facts and figures of consumer businesses as well, which means somebody has taken a two-wheeler loan or a tractor loan from the banks or educational loan or any other housing loan, any other loan. Microfinance entities have everything on their plate. So they know who is over leveraged and who is the right entity. So that has, the entire credit appraisal process has also improved dramatically.
So from microfinance, let me move a bit to private sector bank, the Dhanlakshmi Bank. We've seen recent news of the resignation of the independent director, citing several governance issues in the bank's board. What do you make of it, and what does it tell about the overall governance issues in our banks?
Exactly, Ruchika. That has come to light, and the bank has informed the stock exchanges, and there are allegations about the conduct of the board and the CEO's role and many other things. Now, this is very critical. The governance is an issue, and not only with this particular bank which you named, even some of the other private banks also. I know one particular case I would not like to name, where Reserve Bank of India's senior executives actually summoned the entire board and including the CEO, and gave them literally a dressing down that you can't get away doing this. And RBI is keeping a hawk eye on the governance issues. And at a macro level, you must have seen recently Reserve Bank of India has held, I think, at least 2 meetings with the private banks and public sector banks on the governance issue. And this is indeed the right time when the banks' health is good. Their NPA acquisition is much lower, profitability is all-time high. So this is the right time actually to address the governance issue, which is critical for the health of the banking system. And RBI this has come in the public, but many think Reserve Bank of India is doing, which is not in the public domain. Corporate governance is indeed an issue with a few banks, particularly private sector, and the regulator is keeping a hawk eye on this.
The other issue is about the tenure of the bank chiefs. We've seen RBI increasing the tenure of HDFC and ICICI bank heads. What is happening with SBI? Because there also the term is coming to an end soon. What do you think is going to happen?
Oh God, Ruchika, you are so well informed. Yes, ICICI and HDFC Bank and ICICI Bank, 2 largest private banks. Their current CEO's term are coming to an end. I mean, in October second half, and Reserve Bank of India has given them a 3-year term. State Bank of India, the largest and one of the 50, I think that among the top 50 global banks is there. His term also, Mr. Khara's term also coming to an end in October. And if I'm not mistaken, it's little earlier than them. It's early October. Now, what happened? This private sector, who's the boss? RBI gives the appointment. The board recommends, board sends the name, and RBI, if everything is fine, says yes to it. And of course, there are tenure issues like 12 years, 15 years, etc. Let's not get into this. What about State Bank of India? Now, well, my understanding is this: the current gentleman is set to get an extension because it's there is no interview, etc. is done, and this is done by the government because State Bank of India is a public sector bank and it's ruled by SBI norm, which other banks are Bank Nationalization Act governs them. Now there is no interview, etc. has done by the Finance Ministry and the Appointments Committee till now. So my understanding is the current chairman will get an extension, and this will be the second case in the SBI's 200 plus history. First one was Arundhati Bhattacharya. She got 1-year extension. This time the curiosity again is this: will he get for 1 year or 2 years? Let's wait and watch. I would bet on 1 year term for the current CEO, current chairman, not the CEO. SBI calls the chairman.
Now, as always, we get the best of insights and well in time from you, Tamal, always. Thank you so much for shedding light on microfinance issue and obviously the governance issues as well. We will keep a close watch on all these developments in the days to come. Thank you for joining us.
Thank you.
Well, it is time now for our poll results. Here's what we asked you last week. Would you like to withdraw money from a UPI ATM? 75% of our respondents said yes, they would, while 25% of our respondents said no. Clearly, there is a lot of enthusiasm for the UPI ATM. What kind of currency would you like to withdraw from this ATM now? Well, I'm talking about the rupees 2000 note. September 30th is the last day to deposit your 2000 rupee note in the bank. What happens after that? Will the 2000 rupee note continue to be a legal tender? We don't know. There is, however, another idea which brings us to our poll question this week. Should the RBI bring back the 1000 rupee note? Our poll is open today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We'll be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.